everyone, it is day 10 of our 90 Days to Tax series. In this series, I'm taking new businesses who are maybe a little bit disorganized. I'm helping you get organized and get ready for tax season. So what we've been talking about in the last couple videos is expenses. What expenses can you write off? How do we categorize those? What does that look like? And I've kind of done some videos on very specific expense categories such as home office. Today is going to be one of those videos where I'm specifically focusing on meals. And meals is something that I feel a lot of people overlook. There's different deductibility levels on meals. What I mean by that is a lot of people say, okay, meals are 50% deductible and they move on. There are some meals that are 100% deductible and some meals that are zero. Okay, so I'm going to go over what that looks like. Now, I do want to kind of give you a heads up. I am talking about tax year 2025 moving forward. So I'm going to talk about 2025, 2026, and then after 2026. However, if you are preparing to file back taxes that go back to COVID periods, so 2020, 2021, and 2022, meal deductibility is different for those years. There were some things done during COVID to help kind of stimulate the restaurant industry to where some of those meals you can deduct at different levels, okay? So if you're going back to those years, go back, do research on deductibility of meals for those years. We're gonna focus on 2025 forward, okay? So in general, business meals are 50% deductible. And when I say business meals, what does that mean? You or somebody that works in your company, in or on your company, has to be present for that meal. Okay, and you have to have some sort of business purpose for it. It needs to be ordinary and necessary. It cannot be lavish and extravagant. And we're not allowed to write off any form of entertainment that occurs at that meal. For example, I go to take a client out and I say, hey, let's go to Topgolf. We need to sit down, talk about this project. We need to kind of hash some things out. Okay, cool. I've established it's a business practice or a business meal, right? We're going to Topgolf. We're going to talk about his business. And we're going to talk about services being provided, what needs to change, there's a new project, etc. So we've established it's for business. We've established it's ordinary and necessary. There's a lot of customers that they like to hash these things out over meals. Topgolf is not extravagant. I have to make sure that when I record that meal, the entertainment, the golf portion of that meal is not deductible. I cannot write that off. I can deduct the food portion, okay, but not the entertainment. So I have to have my Topgolf bill split. It has to be split and categorize the food and then the golf. Food I can write off, the golf I cannot. Best practice when you go out to eat with people like that, write on the top of your receipt who you took out to eat and what you discussed, okay? So I took Bill out to eat and we discussed, project regarding whatever, this new machinery or equipment, whatever you want to put on there. It allows you to justify to the IRS in the event that you're audited. Oh yeah, I remember this. This is meal with Bill. We talked about this. It was a business purpose because a lot of business owners try to write off all of their meals. Personal business, they like to go in and they're like, oh, well, I was in the area and I had to get a snack. I was hungry and I was 5 minutes from home, but I didn't want to stop at home. Therefore, it's a business meal. That doesn't fly. That doesn't pass the sniff test, okay? In an audit, you will lose. It has to be for business purposes. The IRS is not going to pay for your everyday, allowing you to eat. That's not tax deductible. You don't get a discount for that on your tax bill. Okay, so generally 50% deductible. Certain items are 100% deductible. So let's talk about what's 100%. If you are throwing a holiday party and all of your employees are able to come, that's 100% deductible. The meal there is 100% deductible. If you are throwing some sort of advertising event, marketing event, and you have food for the general public to come and learn about your business or meet you or meet your team or discuss projects, something along those lines, that's 100% deductible, okay? That marketing event is 100% deductible. You can write off in full that meal. It is not 50%. So those holiday parties for those employees, as long as it's not, I'm taking my 2 executives out. It's got to be for the whole company. That is 100% deductible, okay? Right now, at 50%, we can write off the meals that employer provides its employees for the convenience of the employer. So the employer is saying, I need these guys to work through lunch. I'm going to provide food for them. That's currently 50% deductible. That's going away. We're about to not be able to write that off, okay? After this year, you cannot write it off. So in 2026, that's 0%, okay? Now, right now, thanks to the One Big Beautiful bill, we get to write off restaurant meals 100%. And we get to do that through 2026, okay? So this is new. So if one of those meals where you're taking a client out, it happens at a restaurant or it's takeout, you can write that off 100% right now for 2025 through 2026. They did this during COVID too. So you can write that off 100%. So make sure that you are categorizing, restaurant meals versus a different type of meal. Because that right now is 100%. It's going to go away after 2026. Another thing that's common that I've kind of pulled up some IRS guidance on, for business travel, are there limits on the amounts deductible for meals? Okay. So generally, I'm just going to read this to you and then explain what it means. Generally, reimbursed non-entertainment related meal expenses are deductible if your business trip is overnight or long enough that you need to stop for substantial sleep or rest to properly perform your duties, okay? So what this is saying is if I am servicing a client and I'm gonna fly out to that client and I'm gonna bill them for my meals, I have to recognize the income that I receive from billing that client for the meals. When they reimburse me, I am essentially able to still write off that meal, okay? So I recognize the revenue, but I get to claim 100% of that meal. Now, you can figure the travel meal expenses using either of the following methods: actual cost or the standard meal allowance. So there's a per diem rate. You can visit this website and see what that per diem rate is. And then right here it says the deduction for unreimbursed non-entertainment business meals is generally subject to 50%. So what the IRS is saying, if you have billed your client and you get reimbursed for it at 100%, they're not going to make you claim, they're not going to make you only write off 50%, because then you're claiming the other 50% is essentially going to turn into income. Okay, so it's going to increase that, your tax bill. But if you go and you are not reimbursed, you get 50%, okay, because you're not increasing your revenue. So that's how travel meals work. Hopefully that was helpful. Meals are kind of a weird category. There are some specific industries that have different deductibility for meals. If you have any questions, let me know. If that was helpful, please like and subscribe, and I will see you guys tomorrow.